We're going to talk about this trade war, specifically about the tariffs that are pushing us into a recession and what happens with your investments in the recession. And then it leads us into a point where we're going to make some moves with our investments. I'll tell you what we're going to do and when. There's so many moving parts right now and so much uncertainty and so much confusion. Until all the uncertainty lifts, there's going to be pressure downward on the stock markets. And not until the uncertainty lifts. As long as there's widespread confusion, the markets are going to have a bias to the downside. You can't know what tariffs are on or off. You can't keep track of the carve-outs. It's so impossible to keep track of all this stuff. So you have to wait until the commotion passes by with this trade war. Just let it play out, watch it play out, see what you're going to do, but don't take any actions right now. There's way too much uncertainty to know what the right actions are. In the Insider Exclusive, I was also talking about the counter tariffs, where we're going to start feeling the effects of our tariffs in the next 2 or 3 weeks or so. We're going to start to feel the effects of the counter tariffs in about a month and a half, and it's going to be pretty difficult and hard on us, specifically because it's not like there's just tariffs and trade wars going on in every direction. There's basically the United States, and everybody's sort of polarizing opposite against us, trying to fight. Everybody's fighting against America. So it's America versus. And that's why it's going to be such a massive problem. And it's going to make the recession, which is already going to happen either way. And I've told you, no matter who was the politician in charge, no matter what, we're going into a recession. But these tariffs and this trade war have absolutely hastened the recession, brought us into it right away, right now. The last read for Q1 was negative 0.3% growth. So we get another quarter and there's your official definition for people who still need that. But it doesn't matter, I tell you. Are we in a recession now or 3 months from now when we get the next read and it's negative again? It doesn't matter. All you need to know is that we were recessing or we were expanding. If you're expanding, then there's different decisions, different things you buy than if you're in a period of recession. And I go on to say that there will be a time to act big time, but it is not yet. It's not anytime soon. The one thing that I believe is going to do really well will be the gold mining stocks, just as I have in similar situations in historical precedents. And these stocks are going to increase in price for quite a while the rest of the markets crash, in my opinion. And then what you do when your silver and gold mining stocks, the good ones that I like, when they've tripled or quintupled, you sell them and then you move that money back into Magnificent Seven, all the big blue chip stocks, the S&P 500, some ETFs, back into the indexes. But that's not going to happen even at soonest before a year and a half from now. There's got to be a lot of time for gold and gold mining stocks to increase in price while the overall economy reverts to sort of its real fair value, which we haven't seen in 15 years. But as I've told you, when the recession comes in, and it's going to be here sooner and more harshly because of the trade war, the tariffs. But when the recession comes to town, double-digit unemployment, double-digit inflation, double-digit stock market losses, double-digit cryptocurrency losses, double-digit real estate losses, all while many multiples of double-digit, more than that, increases in the price of the high-quality silver and gold mining stocks. The money that they're digging up from underneath the earth has increased in value tremendously. Do you remember a month and a half ago, I was making a video about when $3,000 gold hit that, I said it'll get to 4,000 with 365 days, and we already reached all the way halfway there a few days ago. It was at 3,500. It hit that level. But what I went on to say was that this moment is about financial survival. You will survive very well if you own some of my favorite gold and silver miners that I talk about in the Peter Leeds newsletter. You will also do well to not own much else until the indexes are done crashing. When is that going to be? It's not yet. I don't know where the bottom is, and I don't know how fast it's going to get there, but I do know it's got a lot lower to go. And at first, we might have a big recovery bounce, a dead cat bounce, or a sucker's rally. There could be a tremendous amount of strength for a month and a half going forward, but overall, fast forward 6 months, a year, where is the market? Dramatically lower than the price it's at right now, in my opinion. And so the last part of my exclusive was I asked, is it time to take action? And I went on to explain that the quick answer is no. There's a lot more to go. We're in inning number one. I can't stand analogies, especially that one, but it's just the beginning. Gold prices are going to go up a lot higher than you think that they will. Stocks are going to come down a lot more than you expect that they will. What I'm doing is I'm backing off the market. I only own the gold and silver miners, and a couple of high quality oil production stocks, and some uranium and lithium because they're so unloved right now. But the biggest opportunities are created or captured during a time of absolute financial chaos. When there's blood in the streets, baby going out with the bathwater, capitulation points, people are just sick of anything to do with stocks, that's when you load up. You back up the truck and you load up. You buy ETFs of index funds, you buy the Magnificent Seven, you buy the S&P 500, you buy all the stocks, the names that you like, all the companies you use day to day. You get Nvidia, you get Meta, everything. But you don't do it yet. You wait until the prices are a fraction of where they are now. And this is where we're heading right now. And you'll know when it's time to flip everything when the gold mining stocks reach to the moon. And then there's a point where the blue chip stocks are hitting the floor. Then you switch everything. You take your profits, you put it wherever you want, but you take your profits and you put it into a lot of these high quality, super underpriced, top of the line S&P 500 stocks. What you want to do is look for a capitulation point in an investment. That's when they're throwing the baby out with the bathwater. Load up then if it's not something that's going to zero. If it's going to zero, you don't want to be getting into that. But if it's something that you know is not going away and it's going to make a comeback, you get invested in it at a capitulation point. Is the most profitable thing or time you can do an investment. And if not that, the other thing you want to look for is things that are super unloved, like uranium or lithium right now, or most especially, for whatever reason I'll never understand, why silver is so unloved right now. It's setting up, by the way, for a massive silver spike soon. The supply constraint that's going to squeeze prices higher. And the last two stocks that I personally bought for myself were both silver mining companies. Now, I know in today's day and age, it's not easy for everybody to get $199 together for the world famous Peter Leeds newsletter. So we also have the Peter Leeds Insiders Club. You can get started for $3, or you can get the Peter Leeds app, $20 a month, or free with the Peter Leeds subscription. It's all available at my website.